Hello traders, looking at Workhorse, Nick Shaheen here. Let's see if we can make sense of these wild swings. First of all, I'm not a super fan of electric vehicles. By that I mean I'm not obsessed with them. I do comment on their stocks just because they are interesting how they trade. Oh, I take that back. I am short NEO. Just because it went from 4 times sales to 45, if not 50 times sales in a matter of weeks. And so my short is very mild. It's not like I'm short the stock outright. I bought some puts out to next year, I believe into March. So I have between now and then for a drop. Today was really green, the trade. I did not take it off. I just left it there. Easy, medium size, small size bet, I would say. Just to pick a bone with one. All right, so not with the company, just the price action. So you tell me, I know they've got a lot of sales, but they spend way more than they make. So I don't want them to be profitable, but you can't just burn 11 billion a year. Something's got to give soon enough. And the ramp was too fast in the chart, period. All right, so let's look at Workhorse. I've done other ones. I've done Hyliion, excuse the pronunciation. I can tell you one thing about Workhorse. There's a ton of information in this stock chart. If you want to talk fundamentals, I'm not the right guy for that. I got up to speed on it. Basically, some people call it a one-trick pony. Other people say, no, the contract is coming. And another group is saying, well, the contract from the USPS is going to be split. I don't like companies that revolve around one contract and make or break it. If the EV market is that big, the addressable market, they keep throwing dollars. I don't know what they calculate that based on. Currently, we have 90 million non-EV vehicle out there versus 2.5 million. So if you assume, let's make that assumption, that everything is going to switch to EVs, which will take decades, we have, the addressable market is basically the moon. But my contention is it's the big companies that already produce the ICE machines that will switch over to EVs rather than all these little companies being huge. So these little companies have room to grow. They will be niche markets versus the GMs and the Fords and the VW, which I believe is the biggest car company on the planet. Toyota might beat it in sales, but I'm not sure about that. Anyway, so not judging this based on its future. It basically looks like it's got a looming headline at some point, yes or no, from the USPS, and if yes, how many, and how much of that price is baked in. The good news for the bulls is a lot of it just came out, right? The good news for the bulls is they're still maintaining a higher low. So what comes now? A big move is coming. I can tell you that. Which way? I don't know, but let's see if we can get some body language that give us a hint as to which way. But the more important is what are the triggers that could give me a clue to chase the run once it starts, if we get that opportunity. Sometimes they open up 100%, you can't do, or down 100, down 30%, you can't do anything about it. But hopefully this one will just give us a hint. All right, let's go. I'll show you my lines, and then I'll talk to them, and then I'll add new lines based on what I'm looking at. I have not looked at this chart in a little bit. Boom. Check it out. All right, so untouched. Look at these 3 circles I have put over the time. Look at that. I mean, are you kidding me? We could not have timed it better. Copy, paste, and I'll just drag it over to here. Put it the same spot. Something's got to give. Every time they get here, it's a contention point, right? They came and failed miserably. When was that? July. They took their time, built a nice base, ping pong, and then they got to it. The moon, Alice. They came down. They couldn't hold it. Hell, wait, look where they bounced. 16, 17, 16.8 is the point of control. I'll speak to that in a little bit. So, solid base. Like I said, they built a base. Off the base they go. They didn't even slow down on this line. That's unusual. Well, they did. This one red tick here. And they went off. I guess I could put another circle right here and another circle right here. I should, but I don't want to clutter it right now. Okay, so they went up, and then they came back, and now they're trying to hold it. What happened here? Whoa, I don't know what happened here. No earnings. Something must have came out. Okay, So now they're stuck in it, and now there's a decision coming. So how do I make up my mind as to what happens next? First of all, I want to stress the fact that I drew a box over this zone because I thought it was a big consolidation zone equals strong support, and it has proven itself. In fact, I'm going to put those circles right now before I forget. I'll put it here because that counts. And I'll put it here. This one's a little bit high, but anyway, let's go drill down. Smaller term. First of all, why do I think there's a move coming? Because I'll show you. I'll use crayon for that. What was that? 360. Oh, Lulu. Different conversation. The range went from pricing to a point. So much energy collecting. Now there's going to be bursts, either this way or that way. So if the burst is lower, they're going to come to here, try to hold it. So 19 should be a floor, the first effort to hold it. And if they don't, they'll bounce a little bit, and then they'll go down. How far down? 15 will be the second place because that is the zone that we said is going to be consolidated. So 16, 17 is a strong point. What was that number? 16.8 earlier. We'll go back to it in a second. The POC, I got to go figure it out. Oh, right inside the window. POC, somewhere around here. I'll show you where it is. Let's go with the happy scenario. We have 23 as a lid, and it has been in contention before, so I nominate it for being the trigger. So I will put my triggers in a second. If this breaks out, they will hit this one, they'll try to blink, they go above it, they'll test it for footing, and then they go. They'll fill the gap and go to the moon. All right, so let me put my triggers before I forget. There's going to be sellers there. Chase it, gap fill, and more. And this is where they'll try to hold. This is where must hold. I'm not going to say short it because I'm not interested. Hold or else. You know, the else is just fall back into contention. So I'm going to go back to a daily chart. Reset it. All right, see that number 16.7, 16.8? That should be a strong floor, and it's a rubber band. Let me speak to it for a little bit. These down here are volume bars, right? And the information is not very useful to me. These are volume bars, the same volume bars. So much more useful. Why? Because they tell me where they happened. These tell me when they happened. I don't care much. These tell me where, at what level. So it tells me that 16.8 is super active. In fact, the most active by a long shot. And let me put a picture to that. So I'm channeling Madden over here. This 2 second biggest volume bars are just around it, and look, they coincide almost perfectly with my box. All right, so what does that mean? On the way down, once it gets into this zone, these 2, 3, they're going to be active. They just told me so. Price is truth. That's price. It's truth. Every time it goes down here, they're going to buy, sell, buy, sell, buy, sell, buy, sell. If it's here, sell, 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 and they hit here, buy, sell, boop, breaks. That's how support works. It's not a hard line in the sand. It's a pretty firm mattress in this case. You can see it. Look. So that number, 16.7, 16.8, is bankable. However, God help you if you lose it. Because now you draw it's not a perfect head and shoulders. It's got multiple shoulders on the left, one crazy humpback shoulder on the right, and one no-neck head. Regardless, it is a neckline that has been fought over for months. And if, for whatever reason, the bears break below it, it's going to the single digits. I can hear you cussing me out already. What the crazy mo flicker? No. I'm not saying that's where it's going. I'm just saying when you establish a floor this fine-tuned, you better hold it. because if the bears smell that you can't hold it, they're after you. So they overwhelm the bulls and they do their job. Notice I didn't draw any arrows lower because I don't want the bad juju. Okay, so I'll draw the up arrows and I'll draw the mini down arrow scenario. How about that? So the up arrow to go with my newly drawn alert will be something like this. We'll stop there. The chat room is still active after hours. Oops. Did I just put a text? Yeah, I did. So the initial line is just above 20. The other line is right here. So my prediction is if it falls to 19, towards 19, I'm going to put a line right here. I'll say if it falls down to here, they're going to try to bounce it back to here. And then they'll find a lot of resistance. And if they come back to here, they could get down to here. And I won't draw the lower scenario, okay? I don't want people cussing me out. So these are possible paths. So the range is super tight. I expect the move. Let's recap. Why is that lines now? That's weird. Okay, I don't want it to be lines. Style. Thin line. Oh, I don't know what's going on here. I must have chosen the wrong thing. Nope, I didn't. Oh well, sorry about that. We'll deal with it later. Okay, so we have a tight situation going into this little tiny circle. A move is coming. Which way it's going to break? The triggers are the immediate triggers. If you're a fast trader, I'll go to 15-minute increments and reset it. If you're a fast trader, then you're looking at 22 and 23, round numbers, right? 22 and 23. 22 will bring you to 23, which will then be another battle ahead of the gap that they failed. I'll tell you why they failed to fill that whole gap. On the way down, the short-term POC is 20.2. If that fails, they'll try to hit my second line, 19, and then we're not talking about the lines below. So the reason why this stopped right here, if you look left, it has had history. This cluster and this poke. So whenever you come to a previously contested level, machines look left. You know they call it AI. It's not really AI. It's a pretty stupid name for it. It's very smart code. It's not AI. We want to debate it? Okay, I'll tell you why not. I'm an engineer, by the way, so I get offended when normal people speak of AI and IoTs and all of that. So here's an example of real intelligence. So I'm a coder. I tell a machine, give it smarts, and tell it, go trade this stock with $100 million or $10,000 or whatever, and here are your parameters, and get better at it. So it'll go in, it'll say, okay, I'll use the moving average, I'll use this, I'll use the Fibonacci, oh wait, I'll use this and I'll use that, and all within the parameters that the writer gave it. So AI is when this machine says, stop, you know what, I'm missing out. I need to go learn Chinese in order to read the headlines from China that are coming from, say, NEO. I don't know, I'm just making up stuff. So when the machine decides to stop what it's doing to go learn a new skill and come back and apply that skill that has nothing to do with this trade, that would be intelligence. Right now, it's super slick code, and it's predictable. It uses math, it uses history. So just look left on the chart, and you can almost predict where things are going or not going. Watch, I'm going to draw it right there. That tiny line I just showed you that was in contention before, where they couldn't fill the gap. Okay, you can see all these tails. They come around it. And if I go left, I'll probably hit another one. There's one right here. So it's in contention for a while. They don't forget it. They get to it. Hey, what happened last time? Oh, okay, let's do the same. They fight over it. And it hits the brakes. Just like this is support on the way down. Whenever you come up to it, it's resistance. Remember when I said the POC, the point of control, is this a 1 day? Reset. All right, so the point of control is 6.8. By the way, this, I should zoom in a little bit because all this junk here doesn't really apply. Okay, so it moved a little bit. So it's now 17.3. I should move more. I should just capture this. All right, let's call it right here, 16.17. Split the difference. All right, so if price was down here below and it's coming into it, it'll be resistance. But since price is above it, this is support. So how does that work out? So right now, sentiment is in control of everything. This is an emotional stock. The whole market is based on sentiment right now. Very emotional stuff going on. So feeling good about a stock is knowing that there is actual technical support below you. So if you know that they bounced over and over and over again, then you're less likely to be shaken out of your position. So you're less likely to sell, so the buyers have a little bit more oomph behind them. So being short a crazy stock like this, then it scares the bejesus out of you. So let me show you a nice scenario for those fans and probably the shorts, the bears. There's always a group of people that absolutely hate the stock, and they love to watch the videos about the stocks they hate, and I get their comments down below. I don't love the stock. Let's say my green lines come to fruition and something like this happens, and then whoop, we come to this point right here. Okay, so go above that point and you've got a rally this big going on. However, you have to get to that point and beat it. Now, if you want to jump the gun, I'm more likely to jump the gun knowing I've got an arsenal of support down below here. So let's put this in plain, simple English. If I own the stock, I'm happy about this price squeeze and the potential move that's coming. I'll stay in it. If I'm looking to get long the stock, I should wait for a trigger, but I'm okay jumping the gun with a little bit of money. So if I'm looking to buy 10 shares, maybe I'll buy 5. If I'm looking to buy 1,000 shares, maybe I'll buy 300. If I'm looking to buy some calls, I'll buy half a position, and I will definitely put time on the clock. What kind of time? Out to next year. I don't know what kind of options does it have. Let's go check. Okay, so I checked, and if I wanted to buy something, I'll go out to April, and I'll pay $5 to buy something up here, a call up here. If I wanted to go to the 30, it's a lot cheaper, but it's more of a lottery ticket, so it's more of a hopium trade. It will give me more profits because I'm spending less, and it'll probably get more oomph on a big jump. If I wanted to go to the 30, I'll probably go longer in time even. So how can I reduce my exposure, out-of-pocket exposure? I can sell some puts. Caveat, I never sell puts in stocks I don't want to own. Did you hear that? I'd never sell puts in a stock I don't want to own. So how does that play? If I wanted to buy 100 shares right now, I can instead sell the $16 put for January and collect $100. Nothing leaves my account. $100 goes into my account. So why? Because somebody out there just bought insurance from me that I will promise to buy 100 of their shares at 16, even if it falls to 14. So what am I risking? Well, in the scenario where it falls to 14, I'm risking $1 in losses on 100 shares because I buy it at 16 because I said I will. I break even at 15 because I collected $1 to do so, and I lose $1 by the time it gets to 14, $2 to 13, so on and so forth. This, as opposed to buying calls where the money disappears, or buying the shares where I'm already down from 21 down to 14. You see what I mean? So if I'm looking to buy shares, selling puts is a viable alternative because I don't need a rally to win. In fact, the stock can fall 30% before I lose money, 25 to 30%. So why not people do that more often? I don't know. You tell me. Because they say options are dangerous. Sure, if you do it willy-nilly in stocks you don't want to own. I mean, this is as frothy a stock as you can get. It could go to zero. We don't know. I don't think they have any. I think they have like 300,000 in revenues or something like that. So they're still basically pre-revenue. So that's why people don't just sell put. I mean, doing it in Apple is one thing. Doing it in a speculative bet is something else. But if I'm dead set on buying shares, how is selling a put more dangerous than the shares? It's not. I have a 30% buffer from current price, and I'm spending nothing right now. I'm getting paid. I'm being a market maker. So how can I leverage that? So if I wanted to buy 200 shares, I'd sell one put and buy 100 shares. Or I'd sell one put and buy one call. This way, I'm also long that way. and the money out of pocket. Like if I spend $500 to buy the April call and I sell one put, so now suddenly I've only spent out of pocket $400. So if it rallies, my base cost is 4, not 5, because I collected 1, I paid 5, the net is 4. This is all upside potential. All right, so what if I don't want to own the puts, the shares, by selling the naked put? I would sell a put spread. And by the way, I can go and sell the April put and collect a heck of a lot more. However, the reason I don't want to do that is because I really don't want to sell a put through an earnings report, because you don't know what they're going to say and you don't know how people are going to react to it. All right, so recap. Do you need another recap, or did I say enough? I think I said enough. It's freaking 20 minutes. Holy moly.